COVID-19 is changing the way the world operates, the way we spend money, and what is also seeing a significant churn. In a first-of-its-kind survey, CNBC TV18, in partnership with PIPSLAY, has polled over 10,000 people to gauge the mood of the Indian consumer. Now, let's break this down for you. Here are the key findings of that survey. 50% of the households polled have been financially impacted due to the crisis. Take a look at that. The graphics there. 27% have been directly impacted and 23% have someone in the family who has been impacted. Now, the next question, how has the pandemic impacted people's wallets? 30% have had to take pay cuts, 28% have seen a loss of income, 23% have been put on temporary leave, and 19% have lost their jobs. So more in the nature of pay cuts as well as loss of income, and 19% have lost their jobs. So how long do people expect the financial impact to last? Well, 2 to 3 months, say about 30%, but the remaining 70% expect the impact to last for at least 6 months, to some even predicting it to last for a year or so. Now, how will all of this impact spending patterns? 82% of the people that we polled say that they will cut down on their spending. 45% will cut down to some extent. 37% will cut spending substantially. 57% of the people polled that they will stick to buying only essential items like grocery and medicine, and they will do so for a year. Another 26% say that they will buy some non-essentials like clothing and alcohol. Only 17% expect no change to their spending pattern. We'll, of course, keep getting you highlights of that CNBC TV18 PIPSLAY poll. Joining me now to take this discussion forward, Preet Dupar, the Chief Financial Officer of IKEA India and the former co-chair of Retail Committee at CII, Arvind Mendiratha, the Managing Director and CEO of Metro Cash and Carry in India. Arvind is also the chairman of the Retail Committee at FICCI. We also have with us Kaushik Das, the Director and Chief Economist Research of Deutsche Bank. Preet, Arvind and Kaushik, appreciate you joining us here on CNBC TV18. Kaushik, let me start by asking you, because the big highlight very clearly suggests that 50% of the households that we've polled, and this is a fairly largish sample, 10,000, have taken a financial hit. 45% of those who've taken a financial hit are below the age of 30. 64% of those who have not taken a financial hit are male. What does this tell you, Kaushik, about where things currently stand when it comes to the economy as well as spending power?
Thanks for having me on your show, Shireen. And let me say it upfront. I mean, this kind of surveys are very, very important and useful for us analysts, because it gives us at least a reference point to kind of figure out what are the upside and downside risks. So great to have this kind of surveys and findings. Now, the thing is that it looks realistic, but I think, things could be more pessimistic on the ground, because there would be a little bit of bias if you go and ask anybody a question whether you've been financially hit. They would say probably not me, but somebody else. So the numbers could be actually higher. Yeah. And yes, my guess is that April, June is anyway going to be a very bad quarter. We are, kind of predicting minus 16.5% contraction in real GDP growth. But this goes on in July, September as well. I don't see a sharp recovery in July, September, even if the lockdown is lifted, because what will happen is a fear psychosis has already come into the consumer's mind. They will not want to venture out unless, it's absolutely necessity. So this will get reflected in the macro numbers, not just in April, June, but at least in July, September. And then depending on the virus, you have to see whether October, December, there is some sense of normalcy.
Yes, and a lot will depend on how the curve, as far as the virus is concerned, continues to build out. At least at this point in time, it's rising. The hope and the expectation is that over the next 4 to 6 weeks, at least in parts of Mumbai and Delhi, we will start to see a flattening, but one doesn't know at this point in time. But, to the point that you were making, Kaushik, on this fear psychosis and people wanting to come out there and spend, or at least some degree of normalization when it comes to spending, let's bring up that graphic for you. We asked, have you cut down on spending? And again, 10,000 people polled, 45% saying yes to some extent, 37% saying yes substantially, and just 18% saying no, they have not cut down on spending. Arvind Mendiratha, what are you seeing on the ground? I've been talking to a bunch of FMCG companies, and it's largely the FMCG players who have been able to ride through the storm, so to speak, because, people need to stock up on biscuits and Maggi and so on and so forth. But they do acknowledge that there is down trading. They do acknowledge that there is no pricing power, and that pricing power perhaps for the next few months will continue to be muted. muted and that discretionary spending will perhaps be on hold. Is that the experience on the ground for you as well?
Thank you, Shireen, for having me on the show. Our experience has been that in food and grocery, if you look at the sales in the month of June, they're mostly at pre-COVID levels. Yeah. There's also a data which came out from AC Nielsen for the month of May, which said that in the urban areas, the FMCG overall category volumes and sales was 70% of the pre-COVID level. In June, we have seen a recovery.
Yeah.
In fact, our view is that people are actually spending a lot more money on food and grocery because eating out has come down to a great extent. People are hardly eating out or dining out. Restaurant sector is therefore badly impacted. Even when it comes to delivery, people are being extra in terms of where they order from. They're not ordering from the neighborhood mom and pop restaurants, but from more trusted, chains. And therefore, they are buying categories within FMCG, which is logical in hindsight. Things like pasta, noodles, biscuits, because you can't have your daily staples every single day for every single meal. So people are trying Chinese cuisine at home, Italian pasta. A lot of frozen demand for frozen food. So people are having ready-to-eat frozen kebabs, French fries. So we are seeing that there's a big buoyancy in these categories. They have grown by almost 30-40% versus a year ago, which is phenomenal. Despite the fact that in a lot of cities, there is a stringent lockdown, and you talked about the people having job cuts and salary cuts, etc. But we are seeing in food and grocery, the demand is fairly robust. Some disruption in supply chain in April, but things are inching back to normal in the month of June. And there's another data which I could share with you.
Okay, and that, as I pointed out, yes, Arvind, go ahead.
See, the other thing which I got to know is the GST collections for the month of June. They're at 90,917 crores, which is a 50% jump versus the collection in the month of May, and almost 3 times the collections in the month of April. So it's also a sign and signal that things are improving and we are seeing a rebound in the economy.
Yes, I think there is no taking away from the fact that June is definitely better when you compare it to April or May, whether you look at the GST collection numbers or you look at the PMI data. But how sustainable will this be and how much can we build on this recovery is the question. But important points that you brought up, and I think that's bearing out in all the conversations that we're having. FMCG staples clearly standing out, the outperformers through this lockdown period. In-home consumption, as you point out, has gone up quite significantly. And Arvind pointing out frozen food, ready to eat, a big surge in volumes there. So that clearly is making up for the fact that you can't go out and eat. But let me get Preet into the conversation as well. And Preet, let's talk about the way forward now. And we asked, will you delay buying electronics and furniture? And I know that IKEA is going to be very keen to get the answer to this question, Preet. Yes, say 63%. That they will delay buying electronics and furniture. No, say 18%, and 19% are unsure. Now, it's important that 69% of those who are earning below 10 lakh rupees per year have said that they will delay buying electronics and furniture. Those who earn more than 10 lakh rupees, 64% say that they will not see any delay in purchases. Preet, what are you picking up on the ground? What's the customer feedback? What are you preparing yourself for at IKEA?
So Shireen, thank you very much for asking me to join as well. And I think what has been interesting is the fact that what we are looking at from a health crisis perspective is a longer term health crisis. This is not a crisis that's going to end soon, globally as well as in India. And people are, you mentioned it as well, at home products. People are living so much more at home, and home becomes, very important. So while there's absolutely no doubt that, the economy is impacted, that, income levels are impacted and spending is impacted, what is also important is to see that people are spending more time at home. And that's where at least, companies like us, come in, because I think one of the things to remember is that IKEA doesn't just sell furniture. We sell furniture, but we are a company that is actually catering to everything to do with the home. And we reopened, our business, both the store and online. And we've seen an uptake, obviously, in A lot of people buying furniture actually for home office requirements. Okay, and having said that,
yes.
it's also dependent on people having a certain level of income to be able to buy that. But what is also interesting is what do we really mean by essentials? The longer this will continue, I think the definition of essentials and what do we really need to live to make our lives at home better, to have experiences at home. We've spoken about dining in, but dining in is not just about food. Dining in is also about setting your table. How do you actually create a nice experience for yourself at home? I think those things are also going to become important, for people, for organizations to sort of say how are they supporting their, co-workers and their employees to be actually able to operate from remote locations. So it's going to be, of course, like I said, if economy is impacted, I don't take that away, but I think the definition of what is essential is, has already expanded and will continue to expand as we go through this time.
So, yes, we've seen many companies, the likes of Google, give out work for home furniture allowances to their employees. And that is something that Preet is alluding to as well, that the definition and the scope of what qualifies as essential has been expanded. Somebody else was talking about the fact that since cinema halls are shut, people who can afford it are graduating to larger screen televisions to get that experience that Preet was talking about. So, yes, we will perhaps have to track some of these crucial trends. But, I want to come back to Kaushik. And Kaushik, let's talk about what the data seems to be telling us. Now, 56% of those who've taken a pay cut are above the age of 30. And I would imagine that that makes sense because at that level, you're probably at a higher CTC. And if cost cut and cost rationalization is the way for companies to go, that's where the pay cuts will really matter or will make a dent and a difference. 47% of those who lost their jobs are below the age of 30. Kaushik, what does this tell you?
So first of all, Sheen, as you know, like our median age of population is pretty low. So you'd expect the younger population, the younger work age group to be affected. And the thing is that if you look at, the RBI Consumer Confidence Survey, which came out in May, that kind of hinted at the same kind of trend that you're saying, that people are kind of bringing down the purchases of non-essential items and only depending on essential items because they are very uncertain about the future outlook. And what has also happened, if you see, RBI came out with a very interesting set of data till March 2020. You'd see that the household sector in India has already kind of become a bit indebted in the last 5 years. So leverage has already picked up in the last 5 years. Yeah. So it's not that they were not borrowing before. So now with this uncertainty and with this job loss fear, and some people have actually lost their job. So unlike US or other advanced nations, we don't have a safety net or we don't have an unemployment program. So what do? Yeah. So you cut down on your, kind of non-essential spending, and even the big ticket items. Do you think, do I need to buy this big ticket item now, or should I wait for 6-9 months before this thing gets over? So I think this is a very, this problem will be lingering on for a long time than what people are expecting. And it will kind of, and remember that India at the end of the day is dependent on 60-65% on the services sector. So this is a very good time to make this reorientation toward manufacturing, which the government is trying, and reduce the dependence on services as well. But that is a long-term story which will play out.
Yeah. Yes, and in fact, it's interesting that you talk about the services sector because the latest IMF report says that the reason why the COVID crisis is different from past crises is that the services sector has been hit harder than the manufacturing sector this time, and it's impacting economies like ours. Arvind and Preet, let me ask you about what the survey is telling us on what kind of financial hit has been taken. 30% say pay cut, 28% say loss of income, 23% say that they've been put on temporary leave, and 19% say that they have lost a job. Now, feedback from your supply chain, etc., do you believe that this number is going to look significantly, if we were to do the poll, for instance, in August, do you believe that this number will look significantly higher? Because so far, there was a mandatory order from the government that, look, you have to pay salaries and you should not cut jobs. So most people may have retained employees and only gone in for salary cuts. But do you believe that this number could look different? What's the feedback from the ground that you're getting? Arvind, let me start by asking you.
Thank you, Shireen. According to me, the number will actually become better. So things will become better as we move forward. Okay. Because in a way, the worst is over. April was a big hit for many companies, especially in people who were not dealing in non-essentials. There was also a major disruption in the supply chain. And people took all those losses and in their stride, and they took a decision not to lay off any workers. I know we did that. We have not laid a single worker, single employee, whether in the stores or in the head office, since the start of the lockdown. As the lockdown has been lifted and restrictions have been eased, the business is improving, the business is picking up, not just in food and grocery, but we are also seeing revival of demand in discretionary areas, though it's certainly less than the number that we were doing before the lockdown and before the start of the pandemic.
Okay.
So things are getting better. And honestly, it's not very easy to replace skilled employees because the cost of replacement of those employees is huge. You know, they have been trained and frankly, it's not their fault.
Yes.
So you will find that if I represent the retail sector, so there was a lot of talk about, which was all gloom and doom, the months of April and May. But as most of the non-food stores have opened, non-essential stores have opened, they're seeing revival in demand. Obviously, it's not back to the level at which it was, as I said earlier. And I think people are looking at where they cannot absorb the people. They're talking to companies which are seeing a buoyancy in demand and putting people in contract jobs 3 to 6 months. So I personally think the unemployment numbers will come down and things will become better going forward.
Okay, you believe that things will get better when it comes to unemployment and that the job loss scenario should not look worse than what it currently is. Preet, would you agree with that? And do you believe that it might be specific to specific sectors? Look, hospitality, tourism, travel, perhaps there we will continue to see more pain and the worst may not be over for sectors like those. But in some other areas, in some other sectors, manufacturing, for instance, where now there is a restart, we could see the picture improve.
Yeah, so actually I agree with both of you, and I think what we cannot afford as a country is a complete, economic lockdown, and I think that's not where, we are headed as well. I think the current approach, which is, going state by state, district by district, that's pretty much the approach, that is needed. Open up what we can, make safe shopping and make safer experiences important. The whole digital experience becomes really important. And I think, just as an example, we were, the first ones to actually launch click and collect in India, saying, where you can actually just come to the store and pick up your furniture while you've done everything else online. So I agree with you that based on the sectors that that people are working with, the numbers will actually not be worse. Having said that, there are sectors that will be impacted much more, and travel and tourism, in fact, is one of them. And I think those are places which will, or organizations and sectors that will really have to see how do they reinvent themselves. I think that is going to be the challenge.
Yes.
The other challenge will be also, it may not be unemployment levels to that extent, but also that wallets will be thinner. I think purchasing powers will be impacted, and it will take time for consumer sentiment to. It will take time. I'm not saying it will not come back, but it will take time. And I think then what becomes really important is to offer, products and services which are actually really affordable to people, and that cater to that to a subdued sentiment.
Absolutely. And, as we were speaking, and you're absolutely right, in fact, a large majority of the people that we poll say that when it comes to cutting back on spending, travel will be the big item that they will cut back on spending. Because, look, at this point in time, at least international travel is off the table. Even domestic travel is severely restricted. So whether it means staycations or it means drive-in holidays, etc. But that's where we will see spending cuts coming in. Watching movies, cinema halls still continue to be shut. Gyms and salons Salons have opened, gyms in most states continue to be shut. Shopping will see a cutback as well, and eating out also, because more of the fear, even the restaurants have been allowed to reopen. But, let me come back to you, Kaushik, on what is the other hypothesis that people are working with, and that is rural recovery. Most people seem to believe that, because it is relatively less impacted by the virus, that rural India is going to aid the recovery, lead the recovery. If you look at some of the data that's come in, for instance, the tractor sales data as well, companies like Mahindra and Escort saying that they've seen a significant demand revival. We've got a good monsoon. So do you believe that it will be the rural recovery that will lead a turnaround?
Yeah, Shireen, that's a good point, and I think that's absolutely true. And I'll add a few more numbers to what you said. If you see the area zone of Kharif crops that are about 100% YOY up from the last year in this June period, monsoon is 18% above normal. So these are very positive signs for the agriculture sector, which would possibly help to support growth to whatever extent it can, because it has a smaller share in the economy, about 15%, 17%. But rural sector would be the main support for growth in this year, whatever you get, even if there is a decline. And the other thing that you mentioned, if you see which are the states which are most affected, like if you see Maharashtra, Gujarat, Tamil Nadu and Delhi, they contribute 35% to total, India's GDP. Whereas the, and these are the industrialized states, and these are the, states where it is more urban centric. So these states will take a long time to get back to normalcy. Whereas, the poorer states or the rural-centric states have not been affected to that extent. So you would expect the rural recovery to be leading the urban recovery in this year. Just one more point I wanted to make, relate to the previous question. There would be relative winners and losers in this epidemic and, industry-wise. But overall, the macro would be affected severely, not because of consumption. Obviously, consumption will take a hit this quarter and possibly a little lesser extent in July, September. From October, December to start coming back, because India has a relatively younger population. They would like to spend. So those long-term trends will kick in. The problem would be with investment, because what will happen is that we have entered this epidemic already on a very weaker wicket, and we have already seen growth slowing down last year significantly. So when the profitability collapses of the corporate sector in April, June, it will not come back in a V-shaped form, like it did after 2008. And as corporate profitability remains weak, what will happen is their inclination to invest or need to invest will also be low, and you'll see credit growth remaining weak, and this will be a further drag on growth. So investment will be a bigger problem than consumption, in my view, in this next 12 months period.
Absolutely. Consumption demand may revive, but investment demand will continue to be anemic. And that, I think, there is consensus on. Arvind and Preet, a minute each to you. Arvind, let me ask you, what we are seeing is a significant surge as far as online sales are concerned. Even FMCG companies, etc., reporting that, saying that they've seen a significant offtake as far as e-commerce sales are concerned. Do you believe that this is going to be the big driver as we look ahead for the next few months?
Absolutely, Shireen. So we launched an e-commerce platform for our Kirana customers. As you know, we are a B2B company. And we have seen that the downloads of the app have gone up significantly. What normally would have taken about 12 months, we were able to get the downloads done in 2 months. And right now, the number of orders that are pouring in on the app are phenomenal. We are finding it difficult to keep up with the supply chain and keep up with the fulfillment of those orders. So I absolutely agree that shopping online, whether it's end customers or whether it's business customers, will gain in prominence. And this will be the new normal going forward. And that's actually a point which I was making even earlier, that people who have been agile, businesses which have been agile and which have made changes in their business model and re-engineered themselves, have done relatively much better even in the April-May quarter. So obviously, if you're not going to change, you will perish. But if you adapt your business model, I think good times lie ahead. And of course, you also talked about rural demand. I would like to say that some of the reforms which have been introduced by the government, like amendments in the APMC Act, will also be extremely beneficial for the farmers in the long term, because they can sell directly to companies and get much better procurement prices than what they are currently getting. So I personally feel a lot more optimistic about the future than some of the reports seem to suggest.
Well, I have to say more power to you and the optimism that you're sharing with us. I hope that it does go in that direction for all of our sakes. Preet, I'll give you the closing comments. What will be the 2 or 3 big trends you're going to be watching out for?
So I think we've already spoken about online, but what is also going to become really, I think, extremely important is how do you build affinity with the consumers. I think India's always been this paisa vasool market, and that's going to be even more important. So it is online, it is an online experience, and really revamping them like that and making it work. As an example, we started remote planning, online planning services as well, for our customers. I said paisa vasool, as I said, and it is about how do I make more of but seriously, it is about how do I make the most of the resources.
No, I agree. I was having a conversation with the leading apparel and fashion players in the Indian market, and every single one of them said that they will have to cater to a much more value-conscious customer. So I think that is a given. Now, the quantum of what value conscious means will differ according to income brackets and so on and so forth. But I think there is consensus that we are going to be dealing with a much more value conscious, or as you called it, paisa vasool customer that's only going to get sharper as we move ahead. Unfortunately, we're out of time, but this is going to be something that we will do much more of. Preet, Arvind and Kaushik, many thanks for joining us here on the inaugural CNBC TV18 Consumer Confidence Tracker. Hope to see you back again. For now, from all of us here on the team, goodbye. Many thanks for watching.